China has been understating its gold reserves by possibly a factor of 10. And I believe this is the biggest story in world finance. The West is just asleep at the wheel, or they're ignoring it, or it's just one of these stories. It's so huge that it's easier just to leave it to somebody else further down the road. And if China suddenly says, we've got more gold than you, to the US, the gold price is going to go bananas, and the US dollar price is going to plummet. And China's just not ready for that. We must not shine too brightly. So it just carries on, steadily accumulating, quietly accumulating. And it will carry on doing that until it's ready to declare its gold holdings.
But just to be clear then, China, what is its endgame then? What do you think it's planning on doing with all this gold that it's hoarding?
Gold is the canary in the coal mine. Gold is the constant. And this little bit of gold was shining, before the Earth was formed, before the solar system was formed. There was a little bit of gold and it was shining, because you can't destroy gold and it never changes and it never stops shining. But I could take a time machine to any culture in the world, in the past or in the future, at any time in history you like, anywhere, any race, any religion, anywhere, anytime, and they would understand that this has value. And it is the purest, most fundamental wealth that there is. It is pure wealth. And that's why so many people have done such incredible things to get hold of it.
This is The Real Story with Michelle Makori.
Hello, I'm Michelle Makori. Thank you so much for joining us here on Miles Franklin Media. If you are enjoying our content, please make sure to subscribe. You're watching The Real Story now, where we go beyond the headlines, beneath the surface, and behind the curtain to show you what is really happening with money, markets, and power. And gold has now hit new all-time highs, smashing through $4,000 an ounce for the first time ever. Behind that rally lies a bigger story, a crisis of trust in the global monetary system. The United States now carries over $37 trillion in debt. Deficits are exploding, and investors around the world are rushing into what Wall Street's biggest bank, JP Morgan, is calling the debasement trade, a move out of paper money and into hard assets like gold. Now, central banks have already been buying record amounts of gold for the past few years, while confidence in US Treasuries continues to erode. For the first time since 1996, foreign central banks now hold more gold than US Treasuries. Meanwhile, this gold rally is helping China get one step closer to its goal of building a world that moves away from the dollar and the US-led monetary order, with gold as a neutral reserve asset. Beijing may also be quietly building what could become one of the largest gold reserves in history, and according to my next guest, already has way more gold than the world thinks. He also thinks we could be on the cusp of major global change, especially as tariff tensions escalate. Dominic Frisby is one of the most original voices in financial commentary and the author of several books, including The Secret History of Gold, Myth, Money, Politics, and Power, which traces how this precious metal has shaped and toppled empires. And he joins me now to connect the dots from the first debasement of money thousands of years ago to the current debasement trade, where gold prices go next, and to the next great monetary reset that may already be underway. Dominic, thanks so much for joining us.
Well, thank you very much, Michelle. It's nice to be talking to you again.
Absolutely. And you're not just the author of this excellent book, which I really have to say is such an enjoyable and informative and engaging read. It's a very easy read, and I really thoroughly enjoyed it. But other than being a prolific writer on all economic matters, you have a Substack, The Flying Frisbee, which gives investment analysis, also a must-read. You're also known for mixing finance with funny, explaining money and markets with wit, clarity, insight, and a little bit of music. So we're going to get into that part of your personality and your work a little bit later on in the show. But Dominic, as they say, history rhymes. It's not just your music that rhymes, so does history. And when you read the book, you see how gold is a consistent thread throughout the tapestry of human history, and we're seeing the same patterns. And I kind of want to weave history throughout the conversation of what we're seeing right now and make the link of, what has happened then is more likely than not to be happening again now in one way or another. But I want to start off with the top headline. And of course, that is what is happening right now with gold crossing over that $4,000 an ounce level, a historic milestone. Now, in your book, you write, and I quote, "You will often hear me saying, put 10% of your net worth in gold and hope it does not go up. If it is going up, it usually means there is trouble somewhere." So, Dominic, gold is up over 50%. Spell out the trouble.
Well, I love that expression, put 10% of your net worth in gold and hope it doesn't go up. And I actually thought that was an old Wall Street saying. And one time I was researching it and I tried to get to the bottom of who actually coined it. And it turned out it was me.
Well, I'm quoting you to you. Yeah. So there you go.
So it's an old Wall Street adage, which I invented. But anyway, I think it's quite a good wisdom to live by. And they do have this idea that gold is the canary in the coal mine. But actually, when there's a financial panic, as, for example, we saw during COVID or in 2008, gold sells off with everything else because the gold price is set at the margin and there's hot money in gold just as there's hot money in every other asset. And when there's a rush to liquidity, gold sells off. But what we also saw in 2008 was that gold was the very first major asset to rebound. And then gold had an incredible run, 2008 to 2011. And there's so much going on at the moment with the US dollar and with China. And but if you sort of go back and look at where this bull market began, I think you could say it began in 2022, 3 or 4 months after the US froze Russian US dollar assets after its invasion of Ukraine. And in the first few years of this bull market, say 2022 to late 2024, there was no or minimal retail buying, which is normally a big driver of gold bull markets. And in Germany, I think Germany might be the 3rd or 4th biggest retail market in the world. They were net sellers. Bullion dealers were reporting quite low sales in the US. And in fact, so where was all the buying coming from, if not from retail? And the answer is central banks. And they were the big accumulators. But specifically, it was central banks along the Silk Road. And, or as they call it now, the Shanghai Cooperation Organization, which is a sort of trade unit of countries basically along the Silk Road. Now, obviously, China and the US are huge trading partners. And the US buys a lot of stuff from China and outsources a lot of manufacturing there and so on. And China, in turn, buys a lot from the US, maybe not as much as the US buys from China, but it's still, they trade with each other. In fact, one of the US's biggest exports to China is the US dollar. But so the natural assumption to make is that while these countries aren't necessarily enemies of the United States, they are not. Some of the countries in the Shanghai Cooperation Organization along the Silk Road, Iran, for example, Russia, they're not what you'd call allies of the United States. In fact, those two are enemies of the United States. But someone like China, you perhaps describe it as a rival of the United States. And at the moment, it's a trading partner. But a lot of people think, the two rivals will eventually meet in some kind of conflict. We don't know yet, but there are many parallels between the US is Britain and China is Germany in the late 19th century. And obviously Britain and Germany had big troubles the following century. But in any case, these countries, you can all assume, do not want to be beholden to the US. They don't want to be in America's power. And by holding US dollars as the major reserve in your central bank, you are vulnerable to, you're in America's power, because if it wants to, it can freeze your assets. When it wants, as it showed it did with Russia. And so the American seizing of Russian assets triggered this thing, what's now known as de-dollarization. And what you've seen over the last 10 years is that gold as a central bank holding, it's gone from 10% of central bank holdings to about 25% today. So it's gone up. It's more than doubled. 150% it's gone up. That's not an insignificant amount. Meanwhile, gold has also overtaken the euro as a central bank holding. And it's also overtaken US treasuries to become the second most held asset by central banks around the world. And the largest asset, of course, is the US dollar. But interestingly, at the same time, the US dollar has now fallen below 50% of central bank holdings around the world. So what we're seeing, even though gold isn't, officially money, central banks are accumulating it, and we're seeing the official re-monetization of gold. I'm not necessarily saying that we're going to start using gold as a means of exchange once again, but we're certainly using it increasingly as a store of value.
Right.
So that's the story of this bull market until, say, late 2024, even early 2025. And then in the last 6 months or so, retail's jumped on board. And retail has been buying in vast quantities. A lot of bullion dealers in various locations around the world are reporting shortages of gold and more so silver. And you know that maybe we're in the latter stages of the bull market, or the latter stages of this cycle of the bull market, because of the fact that suddenly in the last 3 or 4 months, silver's rocketed. Silver's, as we speak, it's trading at $50, all-time highs. $50 is a huge line in the sand. It was the high in 1980. It was the high in 2011. It's a huge line in the sand. And often, when an asset gets above a line in the sand like that, and in this case, it's a 50-year line in the sand, it suddenly catapults. And that's what a lot of the silver bugs are arguing will happen if and when silver gets above 50. Let's see it get above 50 first. But in any case, when people start buying silver, they do that because they look at, you go into your bullion dealer and you say, is that all I can get for $500 or $1,000? Well, I'll take the silver. It's much better value for money. And so silver tends to move later. The other thing that is now moving is mining stocks. Now, mining stocks have been dead for a long time. It's basically been a 13, 14-year bear market in mining with occasional relief rallies. Early 2016 and during COVID, there were relief rallies. But apart from that, mining's been in a bear market. Now, central banks don't buy silver and they don't buy mining stocks. And that's why these things didn't move until this year. But then the gold price just rose to such a level that eventually mining, suddenly was becoming very profitable. Investors were realizing that silver was part of the catch-up trade. And so the last few months have been driven by retail much more. Right. And what concerns me, Michelle, I'll finish very quickly, is mining companies have really been struggling to raise capital for a long time. And suddenly capital's flooding to the sector and it's just being thrown at mining companies. And so mining companies are taking it. Remember, most mining companies don't make money. They're net losers of capital because they're developing and building mines. Until you actually get the mine producing, it doesn't make any money. And so there's a lot of paper being issued. Somebody's going to have to buy that paper in a few months' time, and often they don't, and then mining goes into another bear market. So that's a bit of a risk at the moment. But anyway, as we speak, everything is flying, and investors are making a lot of money, and it's good. Gold bull market.
Well, I'm glad you gave us some of the macro background then. I do want to definitely get a lot into that, including that pivotal point that you said in 2022 when the Biden administration excessively weaponized the dollar by kicking Russia off the SWIFT system. Many people that we had conversations with were saying that was indeed a turning point. But I do want to focus on the near-term price action before we get into that. And we have had, a phenomenal run-up in gold, over 50% year to date. Some are saying that there's a little bit of a concern that we may be at the top, at least for this run-up. When you have the likes of CNBC, CNN, MSNBC talking about gold at 4,000, that's usually not a good indicator. And then we've had the ultimate contrarian indicator, Jim Cramer.
I thought you'd say that.
Well, if Jim Cramer says buy anything, as history again has taught us, it's usually the time to sell. And he's recently been saying that there is room to run. He could be right this time, but based on past experiences, that's not necessarily a good signal. He posted on X recently that he is a confirmed gold bug, and gold is finally catching up with the ridiculous budget deficits. Now, again, I know big picture gold continues to rally, and we'll get into the big macro conversation. But for those that are interested in immediate or nearish term price action, you wrote about the 8 reasons that you see gold continuing to go higher. Briefly break those down for us.
Well, yeah, it's funny you say that. Somebody showed me a chart the other day, and what somebody had done is it was the reverse. They'd invested in the reverse of everything that Jim Cramer said over the
reverse
last
Cramer
15
trade,
years.
yeah.
The reverse Cramer trade, and it was an even better performing chart than Bitcoin. It was the most incredible chart I've ever seen. But yeah, there was another contrarian indicator, Michelle, which was that I got asked on the BBC to talk about the gold price. And, when the BBC are getting somebody like me, an unacceptable person like me on their programs, that's usually a sign of a top. When the media gets involved, that's usually the sign of a top. But so many people are saying this is at least an interim top. Markets have a habit of doing the opposite. And so it is possible that gold just carries on going up. Since 2022, central banks have scaled back their buying a little bit, but every pullback to the 50-day moving average has been bought since 2022. So maybe we'll just get a pullback to the 50-day moving average. I don't know. But yeah, I wrote a piece in the Flying Frisbee, 8 reasons why this isn't a top and 5 reasons why it is. And the main reasons why it is an interim top, I don't think it's the top, because I think gold's going a lot higher. I think probably we'll hit 7,000 is my stated target by the end of this decade. And we might even get to 10,000 on a spike, because you tend to get a big spike at the end of bull markets. Maybe we're in the early stages of that spike now. I don't know. But yeah, my main reason that we're at an interim top is too much media coverage, too many people talking about it, and too much money being thrown at mining companies. But here are some reasons why you could say we're not at a top. The first reason is portfolios around the world are still underallocated to gold. The peak of the last bull market, they were 7-8% allocated. Now we're at just 2%. So, there's a lot of money still on the sidelines in portfolios, investment allocation around the world that could come into gold. Secondly, if you look at gold holdings in ETFs, they're still below 2021 levels. I find that amazing. You would have thought they'd be higher, but they're not. Another reason, I think the nature of the 60-40 portfolio is an idea that sort of became established because bonds were considered no risk, because we were in this secular bull market for government bonds that was, over 30 years, and that's come to an end now. And now there's a new narrative starting that 60-40 shouldn't be the portfolio allocation. And Mike Wilson, who's the chief investment officer at Morgan Stanley, came out last week and said the portfolio should be 60-20-20 with a 20% allocation to gold. Now, if portfolios around the world are going to do that and go 20% in gold, Lord knows where they're going to find the gold price. Lord knows where they're going to find the gold from. The gold price would have to go a lot higher. Another reason we're not at the peak, bull markets in gold tend to last a decade. 1970 to 1980, 2001 to 2011. When did this one begin? 2022? You could say it began in 2018, maybe. So we're not a decade in yet. This incredible, you quoted that figure of 37 trillion. When I've stopped following US debt because the numbers just get so stupid. But when I last looked, it was 20 trillion. And I'm like, it's just added 17 trillion when I've been looking the other way. It's just an extraordinary number. But one thing's for sure, as part of this, like, debt is built into the fiat system. The way fiat money is created, whether it's through government deficits and government spending or through banks lending, doesn't matter. It is inevitable that more and more fiat gets created. And as a result of more and more money, that money's going to get less and less valuable. So 5 or 10 years from now, the dollar, the pound, the euro, they're going to buy you way less than they do now. The decline in the purchasing power of money is inherent. It's inevitable. It's built in. We talked already about central banks re-monetizing gold unofficially. I'd love to just do a little segment on how much gold China has.
We will get into that. We will definitely be getting into that, as well as what that means. I just wanted to get for those that are curious about your price targets, I just wanted to get a more short-term assessment for you, because I have to say, Dominic, you have been one of the more accurate guests that I've interviewed in terms of actually nailing specific price points. You and I spoke November of 2023. You were spot on with your forecasts there. On uranium, which is a whole other conversation, on Bitcoin, which we will probably get into. But you said that gold would hit 3,000 in 2025. Again, your Bitcoin call was really spot on. So, but before we weave out into the big macro, which we definitely will, you said you see 7,000 by the end of 2030. That seems pretty conservative, especially if this macro game plays out and all that entails.
Yeah, well, I was saying 7,000 when gold was 2,000, and in fact, when gold was below 2,000. So it looked a lot more stupid then. Okay. Now 7,000, it's what is it, from 4,000 to 7? What is that? A 75% gain from where we are, 80% or something? I can't do the maths in the time, but it looks pretty right. Conservative now. But when I started saying it, it wasn't. I like guessing numbers. Sometimes I get it.
Well, we're going to get more long-term guesses from you, because, as I said, you were correct. One of the things that you started to mention is retail, the debasement trade. That's been a very big theme. And there are a lot of, I want to go back to your book for a bit, because there's a lot of interesting nuggets in your book, and you trace how money evolved from something tangible and redeemable to something purely based on promises. And you note that if you look at an American or British banknote, it still says, "I promise to pay the bearer on demand." Now, once upon a time, that meant that that note could be exchanged for gold or silver. And today that is just a promise of nothing. And we still use it. And then you go on to say it's
not even real nothing. It's a promise of nothing.
It's a promise of nothing. And it's now in the air, because it's in the digital world. Those promises have migrated into, computer systems, exchanged between parties on belief or trust of credit. I thought it was interesting how you point out that credit comes from the Latin word meaning to believe. And this was very sort of interesting, for lack of a better word again. In the book, you remind readers how J.P. Morgan himself said back in 1912, "Credit is everything and everything is credit." And then when he testified before Congress, he explained that credit is merely an evidence of banking, not money itself, and that money is gold and nothing else. That was J.P. Morgan. And, fast forward to today, and the irony is striking that J.P. Morgan's legacy financial institution is now calling the debasement trade, the first to brand it officially on Wall Street, saying, what has been obvious to many of us, and that is that currencies are being debased and devalued by excessive central bank printing, and telling their clients that they should position themselves into hard assets like gold, silver, and Bitcoin. I mean, what does that say to you that, we've got this debasement trade coming from, well, the legacy institution of the very man who said that the only thing that is money is, in fact, gold?
Well, yeah, it's funny. JP Morgan's often misquoted, but the point that he makes, I suppose, is that if you imagine a pyramid of money, and you've got sort of credit notes and derivatives and bonds and all these things, but these are all different forms of IOU. And even as you say, cash itself is an IOU. And the only thing that is money in and of itself is gold. And you could argue the digital equivalent of that is Bitcoin. And that's an argument I would agree with, but we're talking about gold here. And it's a physical asset that is nobody else's liability. And when he who has the gold makes the rules, as the old saying goes. I didn't coin that one, unfortunately. And but if you've got the gold in your hand, you've got the power, you've got the wealth. You're not reliant on anyone else. But any other form of whether it's a bond or cash or a share or digital money or a credit card or a bank account, it is all dependent on somebody else, and sometimes multiple people. But gold is the only thing that isn't dependent on anyone or anything. It is money. And the beautiful thing about it is you could take that little bit of gold. Let me reach into my drawer here and hold up an interesting, what have I got here? So here I've got a Justinian solidus. Let me just get it out of its packet if I can. From 600 AD, this little coin was minted. You can see it. I'm holding it up there. It's about the size of a quarter or a 2p, maybe a little bit less. And it's shining exactly as it shone when it was minted 1,500 years ago.
Mm-hmm.
And it just hasn't changed. Gold is the constant. And this little bit of gold was shining, before the earth was formed, before the solar system was formed. There was a little bit of gold and it was shining, because you can't destroy gold and it never changes and it never stops shining. But I could take a time machine to any culture in the world, in the past or in the future, at any time in history you like, anywhere, any race, any religion, anywhere, anytime, and they would understand that this has value. And it is the purest, most fundamental wealth that there is. It is pure wealth. And that's why so many people have done such incredible things to get hold of it. They've done amazing things. It discovered new continents, invented amazing new technologies, taken risks that no sane person would ever take, endured incredible hardships, done the most terrible things, murdered people, enslaved people, all to get this little bit of shiny stuff that is not dependent on anyone else. It is pure money. And that's what I think JP Morgan was talking about.
And, that is where the money is flowing, not only on a retail level, but as you said, on a central bank level. And I want to go to that because, central banks have been buying gold at record levels since 2022, since that pivotal moment. We really saw that trend accelerate. You've been tracking this de-dollarization trend for a while, particularly China and its accumulation of gold. And you say that China has way more gold than it reports. Now, we don't really expect, honesty and transparency from China. But you're saying that even the estimates that assume that China is fudging the numbers are way off. Now, China officially reports around 2,300 tons of gold. To put that into perspective, the US is supposed to be the top holder of gold with around 261 million ounces, or over 8,000 tons of gold. That is what the US says it has. Whether it does or it doesn't has more or less, that's a conversation we'll get into. But let's focus on China, because China does seem to be the big reason that we've seen gold rally, and part of this trend of central bank buying, and potentially a linchpin of what could be this big shift away from the dollar and towards gold as a neutral reserve asset. So let's begin with how much gold you think China actually has.
Yeah, China has been understating its gold reserves by possibly a factor of 10. And I believe this is the biggest story in world finance. I've been arguing that this is a huge story for many years. I've been tracking it along with a couple of other gold analysts out there. And the West is just asleep at the wheel, or they're ignoring it, or it's just one of these stories. It's so huge that it's easier just to leave it to somebody else further down the road. And China's motto, and I think it's very important to remember this motto because it gives you an insight into the way China operates: we must not shine too brightly. And I think China is just declaring the barest minimum that it can declare and stay credible. And as you say, China says it has about, let's just say 2,500 tons. And let's say America has 8,000 tons. I'm just going to use round numbers because they're more digestible in an interview. America, 8,000 tons, China, 2,500 tons. Just this century, since 2000, and we know this from geological records, China has mined in China roughly 8,000 tons. So China has mined as much gold as America has just this century. And you have to bear in mind that most mining in China is state-owned, certainly more than 50%. Okay? Also remember, it is not allowed, you are not allowed to export gold from China. So all the gold that China mines, it keeps. Okay, 8,000 tons. Remember that, mined. At the same time, China, as well as becoming the world's largest producer, and it overtook South Africa in 2007, China is also, by far and away, the world's largest importer of gold. We don't know exactly how much gold China has imported, but we do know that 26,000 tons has been withdrawn from the Shanghai Gold Exchange. 26,000 tons. So 26,000 tons and 8,000 tons is 34,000 tons. And in 2000, there was already 4,000 tons of gold in China, jewelry reserves, in jewelry and reserves. So that's a total of 38,000 tons of gold in China. We know that 38,000 tons of gold is in China. Then you factor in that the People's Bank of China, let's just, before I come to that, 38,000 tons of gold in China, and the People's Bank of China says it has 2,500 tons, when we know there's 38,000 tons there. Come on, pull the other one. The People's Bank of China likes 400-ounce bars, which are the Western Standard Exchange, and it buys them with dollars. The Shanghai Gold Exchange uses kilos, doesn't use 400-ounce bars. So the People's Bank of China tends to, and the Shanghai Gold Exchange uses yuan, and the People's Bank of China uses dollars to buy its gold from exchanges in New York, London, Dubai, and so on. So the gold that's going, so that means additional gold, and those transactions through London, Dubai, Switzerland, they're all private. They're not declared. So it is likely that another several thousand tons worth of gold has made their way to China, in addition to that 38,000 tons that we just don't know about and is undeclared. One should also remember that various state bodies in China, also, it's not just the People's Bank of China that owns gold. The army has gold, the Sovereign Wealth Fund has gold, other state bodies have gold. So, and it might be that I've double counted some of that gold, because a lot of gold goes to Hong Kong and comes back to China again through the money laundering trade, which is a big business in China. So it might be that I've overcounted some of it. So I think it's reasonable to say that at least 30,000 tons of gold has gone to China. It's probably more than 40,000. Now, if you just assume that 50% of that is state-owned, 50% of 30,000 tons is 15,000 tons. That would mean belong to the government, belong to the state. That would mean that China has almost double the amount of gold that America does. And it says it has 2,000 tons. Come on. Now, the thing is, China also has 3 trillion. And the other thing to bear in mind is China's been reducing its treasury holdings for 12 years now, but it still has $3 trillion. And if China suddenly says, we've got more gold than you to the US, the gold price is going to go bananas and the US dollar price is going to plummet. And China's just not ready for that. We must not shine too brightly. So it just carries on, steadily accumulating, quietly accumulating. And it will carry on doing that until it's ready to declare its gold holdings. And I don't know what the trigger for that will be. Perhaps some kind of re-monetization, gold backing of the yuan, perhaps a financial conflict with America. Who knows what the trigger, but it's not ready to declare it yet. But that doesn't mean that the gold isn't there. And when it does declare that gold, it's going to mean a lot of upheaval in the financial markets. And a lot of commentators are just going to go, I can't believe this happened. Well, some of us have been saying and warning about it for a long time. It is coming, as sure as eggs are eggs, but I don't think we're there yet.
Okay, a lot to unpack there, including the fact that the US surely must be aware that this is happening on some level, and certainly the Trump administration. But, but before we get there, China is saying this. You mentioned the Shanghai Cooperation Organization. We on Miles Franklin Media, Andy Schechtman in particular, has been tracking that, covering that very closely. They had a meeting earlier this year, Putin was there, India's Modi was there, and they're basically laying down the architecture for a parallel financial system with gold as the neutral reserve asset. And this is now starting to get some mainstream attention. Bloomberg has been writing about this. There was an article there recently saying how Beijing is, or maybe preparing a parallel gold system where trade, settlement, and reserves could be anchored to gold rather than dollars. That there's the digital yuan that could be taking gold into the blockchain, into the a digital form of money. There's Project Enbridge that connects the way these countries can all trade together. And it's interesting, Dominic, because this has not been on the legacy media radar for a very long time. This was sort of considered fringe to even suggest that anything like this is happening. But, you are starting to see the pieces fall into place, right? That there could be this parallel architecture being established to challenge the Western-led systems like, the US-led dollar-dominated system. Let's go back to what happens when this plan does get revealed. You said China says we must not shine too brightly. Help us understand, what would that look like if, assuming the US doesn't beat them to the punch, which we will get into, elaborate on what that could look like.
Well, what I've heard is that Russia wants this now, and China and India are like, slow down, slow down. So the architecture might be there, but to actually make it work is a big ask. If you look at the Western banking system and the Western systems of payments, I often think one of the reasons fiat money has lasted as long as it has is because of the incredible architecture that has been built on top of fiat money by the private sector. The incredible payment systems that we have, where you can, go into your phone and just splodge your phone on a QR code or something, and suddenly payment is taken and processed and passed to the retailer and so on. And, to develop a system of financial architecture like that just takes years and years and years. And it's all come from the private sector, of course, people acting in their own interests driven by profit. But to just suddenly come along and say, this is the new financial system, and expect all the financial architecture on top of it to work, particularly if it's been built by the government rather than by private companies, it just takes years and years. So I think even though we hear all these rumors about Enbridge and all these payment systems, the actual practical making of them function on a day-to-day basis for ordinary retailers, same goes for CBDCs, it's just a huge ask. And I don't think governments are capable of doing it.
I'm not sure that it would be for ordinary retail initially, that it would be more of like a settlement system, between countries.
Well, that would have to start off like that, yes.
With gold as the neutral, reserve asset there. But ultimately, this is the agenda that you think China is moving towards, that it does.
I'm not sure, Michelle, or I think they've definitely taken steps in that direction, but I don't think they haven't pulled the plug on it. They haven't made a final decision because, for example, some hackers found out a few years ago that Russia had paid Iran in gold to buy drones, which it used in the war in Ukraine. And it flew 3 tons of gold from Moscow to Iran. And that's just so impractical to do this. So they would need, a trusted bank to store the gold in, the equivalent of the Bank of England or the Federal Reserve, the role that they played in the 20th century, that is trusted by all those countries to store the gold. And it's not clear who or what would have that role. Maybe it would be Dubai, maybe it would be Singapore, I don't know. But at that point, you have gold stored in one place, and then you have a payment system built on top of gold. It's not the same as the actual gold changing hands. You're relying on the integrity of the payment system. And so again, you lose that gold is nobody else's liability thing. So I'm just not entirely sure it would work. But that gold is having a role as a store of value, I have no doubt. But a payment system built on top of gold, I'm not sure about that.
Okay. Yeah. And on the issue of vaults, I believe the theory is that they would have vaults that are jointly monitored by the various countries that have gold stakes in there. Again, it's very logistically complicated. I get your point.
They all rely on trust and a third party.
Right. That gold is there, but you can represent it digitally on the blockchain, but you still need to make sure that that corresponds to the physical gold, in the vault in the first place.
Somebody's got to audit it. Somebody's got to do the blockchain. Somebody's got to. It's just it can work. I'm not saying it can't work. It's just not that easy.
Right.
And in any case, even if you got it working, the gold standard worked for a bit. And then it stopped working because it wasn't this. I'm talking about the 20th century gold standards. They weren't proper gold standards because ordinary citizens weren't handling gold. It was illegal for Americans to own gold, and gold in Europe was all but withdrawn from circulation. So nominally, the dollar and the pound or whatever were backed by gold, but they weren't because it wasn't a gold standard. At least in the 19th century, there was actual gold in the money. People used gold coins. So it wasn't just a gold standard. Actual gold was money, but we don't use cash anymore. Everything's digital. So I can't see how a digital payment system backed by gold, it's just too many third parties for me. You'll get other gold guys on and they'll tell you completely different. And that's where we're headed. I'm just not convinced.
So what is China's agenda then behind building up this massive hoard of gold?
De-dollarization. What else do you use to store your wealth?
So it's more that they just don't trust the dollar, not that they're gearing up for this global monetary rebalancing. Or, gold just does.
Do you want to live in a house that is your house, or do you want to live in a house that a landlord can come and take back off you at any moment? And if you have the gold in your vaults and it's your thing, it's your house. But if you live in a house that's a US dollar house, then American can freeze your house anytime it likes. It's just a basic power thing. And go on, sorry.
And granted, the US has arguably abused the exorbitant privilege, as it was called, of being the global reserve currency and asset by excessively weaponizing the dollar through punitive measures. Some would say there was no alternative other than military to impose certain outcomes, but that's a whole other conversation. But let's focus on where we are.
I'd quite like to just talk about that, Michelle, if
Sure.
I may, because I think you've raised something really interesting, which is that it's known as Triffin's dilemma, which is the idea that whoever issues the central reserve currency inevitably will have trade deficits with the rest of the world because the rest of the world has to work, whereas you can just print the reserve currency. And so I mentioned it before, one of America's biggest exports is the US dollar. And because of the US dollar's reserve status, the reserve currency status, it has made trade deficits with the rest of the world inevitable. The rest of the world has to, and then because of these trade deficits, it's made US manufacturing less competitive. And JD Vance has actually called the US dollar's reserve status a tax on the American producer. Now, we know that Trump wants to get, he champions the Rust Belt. He wants to get America producing again. And we also know that during COVID, America was caught a little bit with its trousers down when it realized it was dependent on Chinese supply chains for essential critical goods. And then we know that NATO was caught with its trousers down when Russia was able to manufacture munitions more quickly than it was because of its own supply chains. So we know that America wants to get manufacturing back to the US and making stuff for not just because Russ championing the American industry, but for important strategic reasons. But if it's going to do that, it has to sacrifice, as well as tariffs being a tool and as well as the weaker US dollar being a tool, it has to sacrifice some of the US dollar's reserve currency status. And this administration gets it in a way that the previous didn't even mention it, but this administration seems to get that it's going to have to sacrifice the US dollar's status to an extent. Now, it's happy for gold to take up the role that the US dollar had, and China's happy for gold to take up that role as the sort of reserve asset because China has lots of gold and America has lots of gold. So it's fine, and gold is neutral. So at least it's not the yuan or the ruble or the euro or something else, an actual rival national currency. At least gold is neutral. So I think it is actually a deliberate policy on behalf of the US administration to let some of that US dollar reserve currency status be ceded to gold. And that's another huge factor in this bull market, which is what makes it slightly different to other bull markets, because it's effectively a re-monetization, not a re-monetization in the sense of we use it for day-to-day payments, but from the reserve asset point of view. And we don't quite know where money will go from this, how it will evolve, but it's important for people to not to confuse between unit of account, store of wealth, means of exchange, because they're all money, but they're all slightly different functions of money.
Right. And we have discussed Triffin's dilemma on the show and how essentially it does challenge the very fundamentals of the economy. And that's part of the Trump administration's initiative with onshoring manufacturing. It's part of this tariffs conversation. We have Trump saying that he wants a weaker dollar.
I'm a person that likes a strong dollar. But a weak dollar makes you a hell of a lot more money. Hate to tell you. When we have a strong dollar, one thing happens. It sounds good. But you don't do any tourism. You can't sell tractors. You can't sell trucks. You can't sell anything. When you have a strong dollar, you can't sell anything. It's only good for inflation. And it's good psychologically. It makes you feel good. But with that being said, I love strong dollars. But you make your money with a currency. And I had so many different fights with President Xi, between Japan and China. All they want to do is have a weak currency.
To your point, and this is sort of what we're seeing with the Trump administration wanting to make the U.S. less dependent on other countries and to reinstate its sovereignty. Back to the idea, though, of China secretly or not so secretly accumulating gold. I mean, Dominic, if you know about this, respectfully, I'm sure other people in the Trump administration have been doing the math, or maybe even following your work and borrowing some of your math. And potentially the U.S. is gearing up for this too. I mean, could the U.S. also be secretly accumulating gold? Because we have seen the U.S. become a net importer of gold for the first time in years since November of last year, which coincides with the Trump administration taking power. Do you think that there could be a covert program by the U.S. to also be bolstering up its gold reserves? Because it can be done. The president can tell the Secretary of the Treasury, Scott Bessent, who we know is a gold bug, if you will, to go ahead and do this through the Gold Reserve Act, the Exchange Stabilization Fund, and they can buy gold. They do have to declare it to Congress at some point down the line. But, you could say for reasons of national security, we delayed that reporting. If China is doing this secretly, could the U.S. be doing the same?
It very much could. And thousands of tons of gold made their way to the United States, following on from that Trump win. And the story that did the rounds was, it's just going there because he wants to escape tariffs. But, who was buying it? And I don't know the answer to that. And, we all know the fact that the 8,000 tons of US gold hasn't been audited since whenever it was in the 1950s. And forgive me for telling my favorite joke, which is the head of security says to the US president, Mr. President, there's no gold in Fort Knox. And the president says, what do you mean there's no gold in Fort Knox? And the head of security says, there's no gold in Fort Knox. And the president says, double the guard. And,
right.
There was a lot of talk that the US was going to audit its gold. And Elon Musk was talking about it. Donald Trump was talking about it. And then it never happened. Elon Musk was talking about live streaming it.
Well, it could be happening, actually, to cut
really?
you off there. Yeah, because over the summer we had Congressman Thomas Massey introduce the Gold Reserve Transparency Act.
Okay.
The audit the gold bill.
Still talking
No. It hasn't happened. But this is Washington. We are seeing progress in that department or in that topic. It hasn't happened yet. We certainly would have known about it if there was a live stream audit of Fort Knox, but there's movement. Let's put it this way. There is movement. And that bill would require a full independent audit of America's gold reserves, Fort Knox, West Point, Denver. Now, again, it lays out some very clear directives for accountability. We won't get into those details. It first needs to pass. But I think the fact that there's motion here, right?
Yeah, but if Trump wanted it, if Trump wanted it to happen, he just signs an order and it happens. And
you mean an executive order?
Yeah.
I guess it could be done through an executive order. I'm not sure what would be involved in that, but perhaps this is steps in the right direction.
Maybe. I don't doubt it, but it's so cumbersome for something that should be straightforward and annual. And the most easy explanation is that the gold isn't there. Now, I don't entirely buy that explanation, but the gold was spent propping up the dollar in the 1960s, and it made its way to London. There was so much gold in London at one point in the 1960s, the floor of the Bank of England weighing room collapsed. So that's a lot of gold, and it was being flown over from the States. Now, and this is after the last audit was. But in any case, even if the gold is there, and Besant says he's seen it, but even if the gold is there, it is not of good. It would have had to have been. A lot of it will be what they call coin melt. So it would have come from confiscated coins in the 1930s, melted down. And those gold coins were not pure gold. They were 90% gold, same as sovereigns, 92%, 22 carat. And so the gold is not of what they would call good delivery quality. It is not pure gold 400-ounce bars like what China buys. And so even if the gold is there, it's not of good delivery quality. And so maybe the importing of all that gold that we saw, at the turn of the year is to replace what isn't there. That's a possible explanation, so that America doesn't have that colossal embarrassment of when the audit actually does happen, that the gold isn't actually there. So maybe it's getting it. All these delays are part of America getting itself ready for that audit. And by the way, it's worth remembering what happened in the 1930s after the Roosevelt confiscation of gold, is that with the devaluation of the US dollar that followed, a huge mining boom was triggered across the world, in fact, but particularly in North America, and vast amounts of gold. And meanwhile, America, the American government bought all the gold that was produced in America. And so the reserves in the American government or the Fed grew by tremendous amounts in the 1930s as a result. It also bought gold on the open market, so that come the Second World War, America's stores were enormous, and then of course they grew even larger because of all the gold that made its way to America in the Second World War. But so something similar is happening now, in that by devaluing the dollar and the higher gold price, there is a mining boom has been triggered. And obviously it takes a while for that gold to actually be produced, because it takes a while for mines to get built and mines to be expanded and so on. But there's a big mining boom happening, particularly in America. And, Mexico is a very difficult place to mine at the moment. The regulations are creating barriers to progress. And so many Mexican mining operators are relocating, just on the other side of the border to Arizona, Nevada, and so on. And Canada isn't a great place to mine, but the United States is a good place to mine. And so he's triggered a mining boom. And you imagine that a lot of the gold that gets produced there will make its way to the Fed. So one way or another, gold is going back to America. But I think this delay of the audit is a bit smelly, if you ask me.
Well, Dominic, we've had guests on the show that say there could be more gold there. When you account for Gaddafi's missing gold, he had a lot of gold when he was looking at moving to a gold-linked Pan-African currency. The US could have taken that gold. Saddam Hussein has some gold that hasn't been fully accounted for after the invasion of Iraq. So, could be a lot more than what we've been told. To the victor goes the spoils, as it is in the history of war, which is obviously something that you cover, a lot in your book. And I do want to get back into the history of gold here a little bit. But just to be clear then, China, what is its end game then? What do you think it's planning on doing with all this gold that it's hoarding?
Oh, the end game is I think we're away from the end game. The end game is China wants to resume its rightful place at the top of the world. And China thinks it's best, and the Chinese think they're best. And, it's a matter of pride, of national pride for China that, it wins the most medals in the Olympic Games, and it produces the most goods, and it has the world's mightiest military, and it has the world's mightiest economy. And if it wants all of those things, it has to be the issuer of the global reserve currency of the world. So China's end game is to be top dog, and having its currency as top dog is part of its end game. I think we're a few years from it, but that's its end game, all right. And that's a matter of national pride for China.
So that's the thinking, that if China holds more gold, there's more credibility to the renminbi, to the yuan, and China's planning on making the digital renminbi the global reserve currency?
Maybe. I don't quite know what form money is going to take in the future. And I think gold's role as medium of exchange is limited. And therefore, I don't quite see why China would back the yuan with gold. All China needs to do is back the yuan.
Not backed per se, but say, okay, we're credible because we have the gold.
Yes, possibly. I mean, I just don't quite know what form it's going to take yet, and I can't see it. But I don't see a yuan-backed, gold-backed yuan in the way that, the dollar or the pound were gold-backed in the 19th century, because I just think money has evolved since then and it's changed. And the yuan is not a competitor as global reserve currency at the moment because
no one trusts China.
It's not. Yeah, well, it's just no one trusts it, and it's not free trading in the way that other currencies are. It needs to float in the way that other currencies are. But I will say this, I say it in the book repeatedly, there has never been in all recorded history a global reserve currency that did not start out backed by gold and sometimes silver as well, and that was freely interchangeable with gold and silver, and that indeed was gold and silver. They all ended up, whether it's Alexandra's tetradrachms or the Roman currency or the Persian what were they called, the darics or the Florentine florins or the ducats of Venice, or the pound. They all started out backed by gold. They all ended up debased into oblivion, but they started out backed by gold. And if China wants that status for the yuan, gold is going to have a massive role to play in it. I don't quite know what that role is yet, but it is going to have a huge role to play in it, no doubt. And also be in no doubt that China sees its rightful place as top dog, and it has to have the top currency if it's going to be top dog.
So that is an argument that you make in the book, quite rightly. You say that, debasement is exactly how empires rise and fall. And we started off by speaking about the $37 trillion plus of debt, which is more than 120% of GDP. That's certainly debasement to me. And, that empires debase their currencies. And I think it's useful to put things in a historical frame, because a lot of us have recency bias. We only remember the time since the dollar is a king of the global reserve currencies and in charge of everything. And, we have to sort of take a step back and see how small this period of time is in the grand scheme of history and the thousands years history of gold being part of it. And I love history and want you to give us a bit of an example of this debasement. And as you started off saying earlier, perhaps nothing encapsulates it as clearly as the Roman Empire, when the coins were literally debased. And as you wrote, as Rome's coins lost purity, so did her politics. So give us a flashback there. Talk us through that a little bit.
Yeah, it's quite interesting because the old business model of the ancient conqueror and the king was to conquer And then when you conquer, you plunder, and then you tax. And it's a very effective business model, and Rome employed it to great effect. But Rome reached its sort of maximum, the Roman Empire, probably in the 1st century under either Trajan or Hadrian, around about then. And then it stopped expanding, and if anything, it came back a little bit. So where was the gold and silver then that would have come from newly conquered territories? And the answer was it went to great expense, actually a little bit earlier under Augustus and then Agrippa, to conquer the mines of northern Spain. And those mines were what created the money that Rome, in the gold and silver that Rome needed for its constant expansion. And so even though it reached its maximum expansion in the 1st century, and it debased it a little bit under Nero, the real debasement didn't come until maybe 350 AD, around about then. Just before Diocletian, a couple of emperors before Diocletian. But there's something like 200 different reasons have been offered for the decline and fall of Rome. And, alien invasion is one, climate change is another. Another is that it exhausted itself. Another is too many hot baths and too much decadence. But you very rarely hear cited the depletion of its mines. But sort of literally 20 or 30 years before the sudden reduction of silver in its coinage. The gold, by the way, the gold coins always stayed pure. They just got smaller. So the aureus just got steady. It was like 8 grams of gold, and it got to about 6, and then 5, and then they replaced it with the solidus, that coin that I held up there, which has made its way to Byzantium. And solidus, by the way, is where we get the Italian word soldi from. But yes, so it was It was first the stopping expansion, and then the depletion of its mines, and if it had those mines, it could have carried on spending beyond its means, because there was always new gold and silver coming in. But when the gold and silver stopped coming from the mines of northern Spain, rapidly the quality of its coinage deteriorated. And then Rome, once its coins had gone, the empire fell pretty soon after, invading hordes. But it's interesting, the empire had maybe 150 years before relocated itself to Byzantium, Constantinople. And so the Byzantines, as we call them, they actually saw themselves as Romans. We see the Byzantine Empire as a whole new empire in and of itself. And by the way, the Byzantine coinage went through the exact same evolution as the Roman coinage. Started out pure and then gradually got debased until it lost all its value by the time the Islamics hordes conquered it in, I want to say 1347. I can't remember the exact year, but whenever it was. But they saw themselves as Romans. But yes, you spend more than you've got, and you don't have the means to replace what you spend, whether it's through mining or conquest or printing, then the money loses its value very rapidly indeed. And that's what happened to Rome. Happened to Britain. I'm sad to say.
And, not that I'm rooting for this at all, but we could be seeing this happening to the American empire due to that same mismanagement.
You could, but there is such a strong sound money movement in America. And so many people get sound money in the States, and a lot of them are in positions of power and influence now. And then you've got the rise of Bitcoin, and America's turned itself into the Bitcoin center of the world. It really has. It's really embraced it. Maybe not to the extent that El Salvador has, but it can't embrace it to quite the same extent because it's just a bigger country. It moves more slowly. But I think there's enough sound money. There's enough gold in America. It's not all in public hands. A lot of it's in private hands. There's enough Bitcoin in the States, whether in corporate hands, private hands, public hands. I think there's enough sound money and belief in sound money and the sound money narrative. I wouldn't write America off just yet. You write America off, there's a lot of people with big IQs in America. You're not done just yet.
I like that. I like that positivity, quite frankly. I know many of our viewers are going to scoff at the idea that you've called Bitcoin sound money. I personally do regard Bitcoin as sound money, not as sound as gold, because gold does have a track record of thousands and thousands of years, and there's still a lot of question marks regarding Bitcoin from its genesis and whether, quantum computing, for example, is an existential threat to it. But let's bring Bitcoin into the conversation here, and how you say that this combination of the US having gold and Bitcoin could in fact rescue the empire. How does that work?
Well, I'm regurgitating the Luke Groman arguments, but I think Groman has got it absolutely right. As this Triffin's dilemma situation evolves and America weakens its role as the dollar's role as global reserve currency, it's ceding ground to gold, but it's also ceding ground to Bitcoin. And Bitcoin's still got a lot of catching up to do on gold, because governments hold gold and everyone understands that gold has value. There's a lot of people who are still very doubtful about Bitcoin, but a bit like America, don't underestimate Bitcoin. It's it achieved incredible things in its 15 years, and it will carry on achieving incredible things. But the Groman argument is that several years from now, as global reserve currency, we're going to go into some kind of showdown between gold and Bitcoin. And obviously, I love Bitcoin, but a lot of the reasons that gold bugs criticize Bitcoin for, you can't see it. It doesn't exist. Where's the Bitcoin? I can hold gold. Those same reasons Bitcoin has criticized gold bugs for. Oh, clunky gold. You've got to carry it around. Somebody can steal it off you. How do you transport the gold from here to there? I can just zap it on my phone. So, but they're all outlining the essential difference between the two. One is a physical asset. Gold is the most analog asset there is. You cannot destroy gold. It stays forever. This little bit of gold, around your neck or on your finger, it's older than the earth itself. And it's not changed in all the time that the earth's been here. It's seen everything. It's seen the dinosaurs. It's seen alien invaders. It's seen meteors strike the earth. It's seen human beings. It's seen whatever preceded us. It's going to be here long after we've gone. It's just this amazing metal, and it's seen it all, and it's just been totally inert and lifeless the whole time, but it's got a good track record as money. It's the first metal we ever used. We used it long before we used copper. So you've got gold on one side, the most physical asset there is, and then you've got Bitcoin, which is a digital asset. And you just need to understand the difference between physical and digital. They both have different functions. They both have different uses. And at the moment, digital is winning the battle against physical. We don't read books anymore in the way that we once did. We don't use paper in the way that we once did. Everything's PDFs and Kindles. We don't have CDs. We have MP3s and Spotify and so on. Digital has made the world more efficient, more. The digital economy has eclipsed the physical economy at the rate at which it's grown since mid 1980s or whatever. If you look at the growth of Silicon Valley and compare it to the growth of physical manufacturing, you can't compare the two. So digital is on an upward trajectory. Bitcoin is on an upward trajectory, but it's got a lot of catching up to do before it supersedes gold. But the Groman argument is, and it's one that I buy, that as this Triffin's dilemma narrative evolves, we're going to go into some kind of showdown between gold and Bitcoin, and maybe they both operate as reserve currencies, stores of value together, or maybe Bitcoin, because Bitcoin can be used for payments, it can be used for store of value. Maybe Bitcoin supersedes it, and the convenience of digital technology wins. Bitcoin's going to be around for a long time. You're a fool if you write Bitcoin off. It's not. It's going to be around for a long time, but gold will be around a lot longer.
And, that is, you are unique in that you were one of the first people that I spoke to several years ago that embraced gold and Bitcoin. And you clearly love gold, right, based on your work. But as you just said, gold has thousands and thousands and thousands of years of history. Bitcoin, since 2008. So how can you really reconcile that, especially when you bring in the idea of a potential existential threat to Bitcoin as simple as quantum computing?
Well, quantum computing will go wherever it's easiest to make money and destroy that. And Bitcoin is a lot more resilient than the banking system. And that if quantum computing is going to take out the world, it'll take out the banks and hack them first, long before it hacks Bitcoin. So
which is why you'd want to be holding physical gold.
Absolutely, but you'd want to hold Bitcoin ahead of anything to do with banking. I don't think quantum computing is a threat to Bitcoin. I just don't buy that. But in any case, like, there's always this thing. I think it's like this. The social media has created this world where you have to take sides. You have to be a Democrat. You have to be a Republican. You have to be Israel, or you have to be Palestine. You have to be this. You have to be that. You have to be whatever. Bitcoin and gold, we're on the same team.
Yeah.
We're both anti-fiat. We both think the fiat money system has caused so much damage to our countries and destroyed them on so many different levels. We're both allies. And I just don't get why you have to take one ahead of the other. Own both. What's the problem? We don't know which is going to win. And in any case, it might be that they both do. And, they're both having a great time at the moment. Just own both and don't take sides. There's no need. We're on the same team.
That is certainly my position. I'm like white shoes. They both represent the same libertarian ideology and ideals of, decentralized currency that cannot be debased, that cannot be created out of thin air. I do want to bring it back to gold, though. Is there an existential threat to gold? If quantum computing potentially may or may not be an existential threat to Bitcoin, is there an existential threat to gold? Because we are now hearing about gold manufactured in labs, provided you get the price, or now gold coming down from meteors. You mentioned alien invaders, and I kind of let it go, although I do think there is merit to that conversation, which we will have to have another time. But, gold being mined in outer space, a meteor crashing to the earth with gold on it. Do you see an existential threat to gold?
No. If the alien story is true, I presume you're referring to the Anunnaki from the planet Nibiru.
Well, you said that gold has been around and witnessed lots of things, including alien invasion.
I did say that, and I mentioned them in the book. But, the alien invaders didn't bring gold with them here. They came here for the gold, if you buy that story. But in any case, like, you hear Bitcoiners always go, well, there's loads of gold in outer space. As soon as we go to outer space, we're just going to mine the gold and bring it back here, and there's going to flood the world with gold, and the gold supply is going to collapse. Like, seriously, do you know how difficult it is to build a mine just on this planet, let alone you've got to go prospecting for gold on other planets, and then you've got to mine that gold? What are you going to do? Truck the ore in spaceships back to the planet Earth? 5 grams per ton ore? And you're going to track it and then extract it here, or you're going to extract the gold on Mars? It's just so unrealistic. It's stupid. And if it's going to happen, it's hundreds and hundreds and hundreds of years from now. So I don't buy that one. And I guess a meteorite with loads of gold on it could land. That's one explanation for the Witwatersrand deposit, which is, roughly 40% of all the gold that's ever been mined.
And that's
from your hometown.
Yeah, that's my alma mater, University of the Witwatersrand, actually. So,
and,
yes.
Well, it was your whole, the whole of Johannesburg was built on Witwatersrand gold. And
that's right.
What an incredibly prosperous country it was for a bit because of that gold. But one explanation is that was a meteorite, but the geologists have sort of pretty much negged that explanation. And in fact, it was to do with confluences of underground rivers and so on. But in any case, even if it was a meteorite, it was, a one-off thousands and thousands of years ago, and it took human beings thousands of years to find it and mine it. So, I don't see, if a meteorite the size of the Witwatersrand Basin lands on planet Earth now, we're going to have bigger problems than the increased gold supply. I can tell you that much. So
and by the way, I give you props for pronouncing that correctly. Very impressive. That is correct pronunciation there.
Oh, thank you.
Dominic, let's zoom out here, because you did go back and, started this conversation, or certainly brought up this conversation, that you could take a time machine to any society at any point in history, and that they would instinctively understand that gold has value, that it is a truly universal money which transcends culture and time. Why? Why is it gold? Why do we ascribe so much value to gold? Why do you think that it is such a primal instinct to see gold and value gold?
I think it's because it's shiny, and because it's scarce, and because it's beautiful. And as I say, it's the very first human, because it has value, and we know it has value because it's beautiful and because it's scarce. And, you know, it's the very first metal that human beings use. We found it, little nuggets glistening in riverbeds, and we put it round our necks along with shells and beads and things. And maybe we handed it out as a reward or as a prize, and maybe we used it as a tool of barter. But right from the word go, it was performing the role it has always performed, which is to store and display wealth as primitive money, long before ancient Mesopotamia or any of that stuff, long before the Bronze Age, long before civilization began. We were using gold as money. Long before we even had language and a word for money, we were using gold as a money. And it is a most primitive, basic instinct, driven by the fact that we understand that it has value. And there was what was his name? Loeb, described it as the most basic commercial instinct of humankind is gold. And we've just always understood that it has value, and that value is, you know, after food, clothing, shelter and reproduction, the biggest driver of human action in all course of history has been money, gold, wealth. It's driven human beings to do more than anything else, gold. And because it's shiny, because it's rare, because it's beautiful. I think human beings have an instinct for beauty. You know, there's certain landscapes we find beautiful, and we find the sound of running water beautiful because we need running water to survive. Certain landscapes we find beautiful. They're all the type of landscapes that we survive on. A little bit of animal life, green, water, somewhere to take shelter, mountains in the distance to run away to, all that Darwinian evolutionary biology stuff. You know, we have an instinct, you know, a beautiful mate. We see somebody beautiful and we find them attractive because, you know, if we mate with that person, you know this idea that because of sexual selection, human beings have got increasingly good looking with each generation. So that makes us, Michelle, the most beautiful people in all of human history. How about that? But we have an instinct for things that are beautiful, and gold is beautiful. And it's wealth, and we have an instinct, a greed, if you like, for wealth. We've always had it. It's never going to go away.
And gold, to quote you, is also inherently honest.
Yes.
It brings a natural order to things. So, you know, if money is sound, then you have a sounder society, as you explain in your book. One thing leads to another because of that inherent honesty in gold. And one would argue that the society that we are in right now is suffering from lack of sound money and the societal decay that goes with that. As goes the purity of the coin, so goes the purity of the society. And we're seeing, unfortunately, a lot of that. And you've encountered some experiences yourself in the United Kingdom where, now is actually, as we're debasing the currency, before we go into that, perhaps now is a good time to play one of your clips where you're talking, or rather singing, about how they're debasing the currency over in the UK and elsewhere. I think we've got that clip to play now.
Sure.
Printing just a little bit, printing just a little bit of money here and there, running up a deficit, what of it? Running up a deficit, for who on earth will care? Nobody will notice it. Nobody will notice it, so unaware. House prices are getting lit. House prices are getting lit, yeah. Stocks and shares are bull market. We should speculate in it, we'll all be millionaires. Everybody's getting rich, quite legit, so legit. It is just a counterfeit, beware. Cantillon effect of it, effect of it, effect of it. Young and poor to take a hit, some fall into welfare. Can't afford a property, property, property. Do not start a family, they're starting to despair. Population shrinks a bit, shrinks a bit, shrinks a bit. Immigrants replacing it from who knows where. So much inequality, quality, quality. Goosing the economy, no laissez-faire. More and more on benefits, benefits, benefits. So many on benefits, now fraud is everywhere. Who is going to pay for it, pay for it, pay for it? Who is going to pay for it, to pay for this affair? Taxes rise to cover it, smother it. Try to fly away from it, people running scared. Can't control the deficit, money pit, money pit. State is now a money pit, especially healthcare. Print a little more of it, cannot quit, cannot quit. Print a little more of it, devil may care. Try to save the currency, bond market, crashing it. Short sellers are coining it, crime's a nightmare. Everyone's to blame for it, poor and rich, hypocrites. Foreigners to blame for it, rioting flares. Till there's nothing left of it, left of it, left of it. Till there's nothing left of it, left of it, left of it. Chaos, chaos. Printing lots of money is not working anymore. Chaos, chaos. Printing lots of money is not working anymore. Chaos, chaos. There's nothing left of it, it's gone.
Well, Dominic, you basically summarized the state of the economy to song and rhyme over there.
Thank you. I enjoyed writing that. I do comic songs as a sideline, so yeah.
Comic, but with tremendous economic insight, and everything that you said there, factually, accurate and checks out. So it's a gift to be able to put financial literacy into
Thank you.
song.
Hyperinflationary collapse in song.
Yeah, I suppose that's one coping mechanism, right? Kind of have to, make light of it in a way. Freudian coping mechanism of humor and throw in some music.
Something like that.
But Dominic, you've actually gotten into yourself a little bit of trouble in the UK for trying to express some thoughts. So I think it's an opportune time to sort of link this back to the idea of sound money and losing a sound system and how it all ties in, and some of the freedoms that us Americans take for granted being eroded in the UK.
Yeah, the UK is in a very bad place at the moment, and I've never known anything like it. And people are getting more and more frightened. My mum, for example, people are scared just to speak their thoughts. And it never used to be like this. You were always able to say what you liked. And censorship has become a really big thing. And I actually wrote another song called We Are Replacing the Population. And it was another comic song, but maybe one quite close to home. But YouTube nuked it. Even Twitter nuked it. TikTok nuked it. They all just throttled it totally. And I don't know if it's the algorithms of those sites, or I talked to, oddly enough, I was talking to AI about it, and it just said there was just too many trigger words in the song. And
and people aren't aware, Dominic, that in the UK, civilians are being arrested for posts on social media.
I know, it's insane. And more than any other country in the world. More than Russia or, I don't know, Venezuela or somewhere. I don't know about North Korea, but it's really bad. It's so much, because we brought this online hate crime act in, and the police have to do their trust in the police is gone. In fact, when you asked me at the beginning, Michelle, for my 8 reasons for why gold's going to go higher, falling trust in institutions was the 8th one that we didn't get to. But in the UK, it's hard to think of a single government institution that's operating well at the moment. The health service, education, the police, everything's failing. And yeah, we've also got this problem of mass immigration. It began with Boris Johnson. It's called the Boris wave. And after the EU, after we left Brexit, one of the reasons everyone voted for Brexit was because they felt there was too much immigration. And instead of opening up the doors to Europe, he closed them to Europe and then opened them up to the rest of the world. And you just go into any town or city in the UK, it's unrecognizable. Literally, the population of the UK has changed. And people go, well, it's still the UK. And I'm like, it isn't. There's different people, different culture. It's just not the same place anymore. And I don't quite know what you do about it, but we're in a bad place. And we're operating very much on a two-tier system of justice where the locals, the indigenous people are being policed at one level of expectation, and then it's a different set of rules for everyone else. And, we've got mass rape of local girls, which, in the Balkans was considered a war crime. It's estimated hundreds of thousands of girls have been raped over the last 20 or 30 years, and possibly even millions. I mean, it's just insane. And it's just hushed and nobody talks about it. And, because it goes against the multiculturalism, diversity narrative. It's all sorts of terrible things have gone on here, and we're in a really bad place. And I don't quite know how we get out of it.
Well, I know that one of your music videos was, reposted, retweeted, re-ex-posted by Elon Musk. It got a lot of attention. But let's bring it back to sound money and gold. I mean, you've touched on so many geopolitical flashpoints and societal issues that we can't really address them now or have a healthy conversation or debate about them. But let's bring it back to sound money and gold. Because I think it would be interesting to end with your idea, which is somewhat an idea that's also championed by Bitcoiners, inspired by gold, and that is, fix the money, fix the system.
Yeah, fix the money, fix the world. And the problem with so much of what's going on in the UK is that it's all paid for by the government, and thus it's paid for by the taxpayer. So you're the fruit. We're taxed. We're now, if you include inflation, we're taxed at more than 50% of GDP. And, I think our population's 65 million. There's something like 11 million working age people who don't work. And it's literally 25 to 30 million people who do all the work and pay for everyone else. But we've got this ridiculous situation where I'm paying tax and my tax money is being used to house illegal migrants in 5-star hotels. What? I didn't want my money spent on that. And, so much money is being wasted. And then you have all these human rights lawyers standing up for such and such a rights. Well, that's being paid for by my tax money as well. And then you have the school system and what kids are taught at school and taught how English history is bad by the state system, teaching you that our own country is bad. Well, that's paid for with my taxes as well. And none of this stuff, the police clamping down, the stupid hate speech laws, it's all paid for with my taxes and your tax and everyone else's taxes. And by governments that run deficits. It just would not be possible under a gold standard and a simple, transparent system of tax. It just would not be possible. So I just say fix money, fixed. My other book, my last book was about tax. My one before that was about Bitcoin, and my one before that was about how government should be smaller. So all my books are on a similar theme. But you fix money, you fix tax, you fix the world. And fix money, fix the world is the mantra of the Bitcoiner, but it should be the mantra of the gold bug as well. And I'm very much a believer in that mantra. It could not happen with sound money.
And of course, sound money is money that cannot be created.
Sorry.
Yeah. Well, sound money, just as a recap for our viewers, is money that cannot be created out of thin air, if you will. Money that cannot just be printed into existence or clicked into existence.
Or
it's
lent
money that,
into existence.
Or lent into existence, money that cannot then therefore be devalued and debased. Dominic, we've covered a lot of ground here. I really, really recommend the book. For those that want to learn more about you and your work, as from your music videos to your financial advice to your more long-form literary works, where can they find you?
Yeah, well, thank you very much. And I'd be very grateful if you'd put a link in all the, to all my stuff in the description. But if you want to follow me on Twitter, I'm at Dominic Frisby. And I actually have 2 Substacks. I have one for all my financial stuff, which is called theflyingfrisbee.com. And it's very successful. It's just doing incredibly well, that newsletter, growing in popularity all the time. I think we're number 43 or something on Substack, but that's theflyingfrisbee.com. And then if you're interested in my comedy and my comedy songs, frisbees.news is where you should go and put your email in there, and then you'll get emailed my funny songs if and when I make them. Frisbees.news.
Funny, but yet incredibly insightful and cutting and valid on many, many, many fronts. But, it's a good way to sort of encapsulate some of the big macroeconomic issues into song and dance, makes it a little bit more digestible, if you will. Dominic, thank you again so much. We really appreciate you here on Miles Franklin Media. Thank you for joining us.
Thanks so much, Michelle. Lovely to talk to you, and hope our paths cross again soon.
I'm sure they will. Thank you, Dominic. And as always, thank you for watching. Make sure to hit the subscribe button if you haven't already. Also set your notification alerts. By the way, we have a weekly newsletter. You don't want to miss out on that. It has previews and specials, and there's a link in the description of this video to sign up for the newsletter. It's also on our website, milesfranklin.com. And as always, leave us your comments here. Feel free to praise wine or just opine. I do read them, and I often get some really good question and topic ideas, so please keep them coming. Until next time, for me, Michelle Makori, and the rest of the team, we'll see you soon. Stay sovereign.
This is The Real Story with Michelle Makori.